Welcome to Lincoln News with your host, David Lincoln.
All right, thanks for that. Yeah, it's kind of funny. When I first started with the YouTube thing, I got all these really kind of ridiculous intros and things. I figured if I had a bunch of intros, then maybe like that would somehow spur content or spur people to watch or something like that. And it was kind of fun, but I look back at them now and it's funny. Anyway, I wanted to come on and talk about what happened in the end at BYND and UVXY at the end of the week, and so let's go ahead and do that. And I wanted to talk about my position in BYND, maybe for people who are not familiar with the options world. You can see part of my green screen on the edge there is kind of fading out. Anyways, it doesn't really matter. So when you sell calls, when you sell a naked option, there's a model that assigns some sort of cost to that, some sort of buying power reduction to selling that call. And as for example, in BYND, I sold out of the money calls. By that I mean the stock's 159 right now. The calls I sold are up around the 200, 205, 230 strike. So as this stock moves higher towards that strike, they require you to have more and more cash in your account. And so, for example, if I pull up the position right now and move out of the way for a second, let me see if we can see this well. So if I move the screen slightly here up, that might help. And maybe make it bigger. How's that? All right, so if I pull up BYND, and this is a very small position, but if I click on BP effect, this is going to pull up a table, and now it's too high, that shows where the buying power reductions come from. So we look at naked calls here, and each call that I'm short is reducing my buying power by about $2,500. So the 205 call, it's a lower strike, and so it reduces my buying power by more than the higher strike calls. But so if you look at the 205 call, it's reducing buying power by $2,670. The 230 call is reducing it by $2,100. Now, this does not mean that you need this much money in your account to sell one of these calls, because remember, the price that you're selling the call for is going to be subtracted from this amount, right? So if you sell one of these calls for $10, then you only need $1,300. In this example of $2,300, if you sell one of the 210 calls for $10, you only need $1,300 in buying power to cover that call. But the point being, as this moves higher, if you don't have sufficient funds in your account, you may be forced to cover your position, and that it's a good thing and a bad thing. It's a good thing in the sense that it forces you to not lose too much money, because it forces you to cut your losses at some point. But it could be a bad thing if this thing just goes up temporarily and then comes back down. So let's get back to what happened on Friday and this week so far. So I've been trading BYND for like a month now, and I've had some good plays. I shorted it. Let's straighten out this display here. I shorted it on a couple rips, and it went back down, and that was good. But I have this small position now where I'm just naked short some of these calls up above the all-time high. The all-time high being 202 here, and I picked September. That way I can benefit not only from the stock staying below 200, but also from a volatility crush, which I feel is coming. because this stock, if you look at the chart, it's starting to kind of slow down. The highs are not as high and the lows are not as low. It's kind of finding sort of a range, and it's kind of this like triangle effect of where it's slowing down how much it moves up and down, and that will translate into option prices coming down as well. And thus I picked a month that's far enough out that it's got some real vega to the options, and we can feel the vol crush. So I reported to you on yesterday morning, and it was right about here in the chart. It was around, I think, 167, something like that. It may actually have been around the high. I can't really remember exactly when I came on, but anyway, it was up here, and I was thinking, I don't really want to go into the weekend with this at the recent highs. I mean, the last few days, straight up. I don't want to come into the weekend with this, pushing higher and higher and higher, and me having this risk on. I'm not going to be very comfortable over the weekend. And I kind of sweated through the day a little bit. And I really have a conviction that this thing is really overvalued. So anyway, I kind of just hung out, and then I had to go into my side job. And right before I went into my side job, we got this move down into the close, where like the $6 down move into the close, which benefited me being short, and I ended up selling, I think, one more call against this position as my buying power expanded as we move back down again here. Now, as I explained once again, as we move lower, all of a sudden it shows my account having more buying power to do other stuff, and as it moves higher, it has less and less buying power. So this is something that you want to be aware of, and you don't want to put yourself in a situation where you would be forced to cover if this thing moves against you by a bit. I want to be able to say, okay, I have a conviction that this is going to be below 200 on expiration, and I need to be able to ride it till expiration, even if it moves above 200 for a moment or for a little period of time. So that's the theory with that. Definitely, I have been short this pretty much the whole way from about this 150 level in one way or another, and so it has gone against for a few sessions now. So it would be nice to see a little move down next week would be awesome. My sound in my monitor is not going so great today. All right, and welcome to the chat, folks. If you came to check out the scene here, I'm going to pull up a watch page, and hopefully it doesn't. Let me make sure I'm muting this properly. Pretty much there we go. And in meantime, in UVXY land, we had a nice down move, and this was a opportunity to get short this week on a little mini spike, and certainly members of our community did take advantage of that. I did see Michael Listman talking about putting on a trade with UVXY up around the 33 range. Let's pull up the chart on UVXY now, and we see a nice down move here from 33.70 level, and let me make sure I'm out of the way here. But a nice move down from this 33.70 level to almost take out the all-time lows again. Pretty close. And this was an opportunity here because we got a little bit of a pop, and then the continued down move. I came on yesterday. I was talking about the term structure and how the roll yield situation kind of, sort of, maybe indicated that the VIX was the cash was probably going to move lower. At least that's the way the term structure kind of set it up, because the structure, the shape of the term structure kind of seemed normalized. However, the only thing that didn't seem normal was the fact that spot was so close to the front month future. And in fact, that has expanded quite a bit since then. Now we're up to 62 cents between the front month future and spot. When we talked the other day, I think it was only like 25 cents. So still kind of narrow at 65 cents, the roll yield here, but it has expanded since we talked about it 24 hours ago, as well as contango expanded. So this is a, sort of a classic normalized VIX term structure here. Contango over 5%, and the upward shaping curve. You see December always a little discounted as far as pricing because we know that there's several holidays during December and volatility is dampened in that period. And so as time goes by, more and more they kind of shape the curve that way, having an awareness that December will be a slightly lower vol month than the months around it due to those holidays in that time period. All right, so so congratulations if you've been playing UVXY to the short side, because it definitely worked out. Take a little heat on this pop here, but this was a great time to jump on here. And if you look back through my videos, I did give some examples of things to do. I was talking specifically last time about the VXX put spread, which was to buy, I believe I was talking about the September 27-25 put spread. And now all of a sudden we are brushing against the 25 strike as opposed to the 27 strike, which we were just talking about a few days ago. So if we look at the VXX chart, very similar to UVXY, and we've gotten that nice down move. It turned out it was a great spot to short it up here when this was around 27. As of now, I mean, we'll have to see what happens moving forward, but with contango of approaching 6%, that means that there is some real lag and decay on these products, and they are feeling it and moving lower. So cool. I hope you have been profitable in your trading endeavors as of late. I was checking out some. I love to watch H3 Productions. I don't know if you've familiar with that YouTuber H3 Productions, but he has all this interesting stuff goings on in the world, and he was turning me on to this Belle Dauphine Bell 9. Let me look her up this way. He was turning me on to another one of these Instagrammers who's gotten super famous, and she posts pictures of herself on Instagram, and she said if she got 1 million views that she would start a Pornhub account, and she got 1 million views, and she started a Pornhub account as just a joke, and she made these videos for Pornhub that actually weren't porn. They were just like had porn names to them. So she kind of trolled all these people. It's pretty funny, but check her out, Belle Dauphine. She has a Patreon account where you can spend $2,500 a month to be her god or something like that. And she's laughing her way to the bank based on guys paying her to look at her picture. And a fine British young lady, as well as I was born in England also. So check out Belle Dauphine on Instagram. All right. So anyway, we'll have to see what happens in BYND moving forward. I have strong conviction that this thing is over, and we're just going to see lower and lower lows, and it's going to turn into sort of a Tilray situation. But we will have to wait and see. If we look at the chart here, there is this uptrend that we're still kind of in right now. So we'll see if we bust out of that or not. But I feel like the more times it tries to go up, people have a bee in their bonnet a little bit with this, as far as, well, I bought this stock and it's trading 6 times what it IPO'd at. How long do I really want to hold on to it? And one of my friends made a good point that for this to trade this high, it has to have not just like retail people buying it, but institutions buying it and placing a big bet on it as well. And so we'll have to see how it pans out here. But hanging tough with the position, short the 205 strike, the 210 strike, and the 230 strike in BYND. And, I'd love for it to just start bouncing back between like 150 and 130 and be done with it. Now, the question is, and I used to have strangles on, that being I had sold an out-of-the-money call and an out-of-the-money put. I switched from strangles to just being short out-of-the-money calls. And so I'm kind of planning, well, what happens if this actually does go back to like 120? Okay. It shows my delta right now, BYND, at short 90 deltas. And let me just make sure this is the right date and that there's not extra stuff on here. But when I go to the Analyze tab, and I do have extra stuff in here, so let me cancel this. Okay, so when I go to the Analyze tab, it shows my delta at short 74 deltas. Now, what does that mean? That means essentially that if this goes down $1, I should make about $74. If it goes up $1, I should lose about $74. And you can see it shows different prices. 10% above, I'm short more deltas, 104, because that makes sense, because the higher this moves, the more likely the calls I'm short are to be going in the money, and thus they're assigned a higher delta as the underlying moves higher. Because as we move closer and closer to those calls, the more and more likely it is that they'll be worth, that they'll end up in the money, like I just said. And also, as we move lower, the delta of those calls affects things less, and we see a lower short delta. However, there still is a short delta. But the neat thing about the way buying power works is that having risk to the upside, you can use the same amount of buying power that you're using for that upside risk to risk to the downside. The reason for that being that I'm gonna answer your question, Hubris, in just a second. The answer being that you can't lose money both for it going too high and too low at the same time. Thus, they allow you to use the same amount of buying power that your upside risk is assigned to protect. You can use in downside risk. So what that means is I'm thinking that I may sell some downside risk as we roll lower. So let's say that this gets back down to like 120. Well, it looks like the lowest strike in September is the 70 strike, but these 70 calls, as we get closer to the strike, they're going to go way up these 70 puts, as they get closer to the strike, are going to go way up in value, and definitely would be worthwhile to sell a little downside if we get way down lower, because there is some bottom at which this is going to hang out. I don't think that it's going to go from like 200 back down to 40 in like 2 months. But so it will make sense at some point to try to capture a little bit of this back and forth, maybe by selling some of these 70 puts. Like, let's say these 70 puts get up to like $6 or something. Definitely worth selling some of those. And then you get a pop back up. Well, you can buy back in those puts. Conversely, this goes way down. I could buy back in some of these 205 calls, 210 call. I could buy those back in, or I could roll the calls down. Instead of being short the 230 call, I could buy that 230 call back and sell like a 180 call against it. Something like that to collect more money. Yes, Hubris, the flow of BYN, the float is low. There are not a whole lot of shares trading, and a lot of it is locked up still due to restrictions on stock from the IPO. I will try to do a little bit more research into exactly which firms own BYND stock. When we've got a company that's worth billions of dollars like this one, I think, it's worth over I can't remember if it was $1 billion or $9 billion, but it's worth a lot of money, and you don't have retail investors even a lot of them adding up to being able to spend billions of dollars on a stock. So there is definitely some institutional investing. I'm not sure how much there is, but it takes a lot of money to get this to pop all the way from 40 up to 200. And it says you prefer VXX options, better spreads. Totally with you there on that one, my friend. VXX. Ever since that Volmageddon, UVXY has been very hard to trade in that they fade everything. They keep the markets really wide, and it's just very difficult to trade. In fact, if we pull up UVXY right now and just take a look at the markets, I know this is not really representative because it's after the close. But you see these, at the money in September, 515 bid at 675. Okay, so that's like $1.50 wide. Look at this, Sep 20 calls, 970 bid at 1360. Well, I'll make a market like that. You want to trade with me on like, $4 wide market when the underlying is only, 15 cents wide. I can make a market in that too. And we know that this stuff will trade mid-market, a lot of it, but not always. And you don't want to find yourself in a situation where like you are stuck with a position that's kind of obscure. And even in UVXY, even something like September is kind of obscure. If we look at the open interest here, there's something in September, but it's not huge. I mean, the biggest any single strike has is 2,000. And on any single day, trying to like trade a spread in September, the strike you're trying to trade may not have traded at all that day. And as a result, I understand why they make it wide, because they can, A, and B, because they don't have a lot of liquidity. But the VXX spreads are tighter and you can just get more done, and it just feels like there's less shenanigans going on with these wide markets and VXX. So good point. VXX easier to deal with. And I've always made more money in VXX for some reason. Maybe it's partially due to that. UVXY is more attractive in the sense that it's got that leverage. It's 1.5 times levered, and that makes it attractive, but harder to get stuff done in. And like I said, I will try to get more information on how many shares in BYND are in the float at the moment and when new shares will become available. I know the other thing a lot of people have been talking about is it being added to the Russell 2000 and it being added. These days, so many of these stocks are traded in these ETPs and other, they're parts of these other baskets of stocks. And you see the prints go up on this all the time, like someone buying 14 shares and all that. A lot of that is program trading for these ETFs and stuff. And the order flow in ETFs dominates the marketplace, and it makes all these things move. And it explains a lot of moves and a lot of different issues. And so you can have this, the like internal drama of the stock trading, what's happening in this particular stock during the day, can be overshadowed or taken over by some ETF that just needs to buy it in a basket, going against the grain. And as somebody who's making markets on the stock, you probably need to identify what orders are what and what people are trying to do. Is it somebody who's wired, who knows that news story is coming out in a few minutes, who's buying stuff, or is it just some part of an ETF where they just have to buy it to rebalance or something? I know the longs in this chat have been talking on StockTwits about like, oh, well, this is going into these big indices, and that means that they're going to have to buy all these shares, and it's going to really rally the price of it. And I've watched so many stocks being added to like the S&P or this and that have completely just gone down on the day when everybody was predicting they were going to rally because of this addition. It's like so many people make that play, like to buy something ahead of when it goes into an index, and it's almost like too many people make the play, and then they all have to dump their shares at once when it actually gets into the index. But making a play in a stock because you think it's about to be added to an index, you may fall victim to the thing where like you think you're smarter than the market, and it turns out you're not. The big players on the street have millions of dollars in research, and they're wired, and they have all this stuff figured out better than you will most of the time. So coming into some sort of trading idea thinking that you've outsmarted the rest of the market, usually what happens is the rest of the market has outsmarted you. So I would be careful about that. This is a tough game here, folks, and so it will humble anybody. So there you have it. Thanks for watching today. Enjoy the rest of your weekend. Stop watching the internet. Go outside. It's beautiful here where I am right now in Cape Cod. Beautiful weather out. And so go outside and enjoy it. Leave the stocks until Monday, where they'll be waiting for you in the morning. Next week, 4th of July week, a lot of people are like kind of not around. There's definitely sort of a liquidity thing for 4th of July. And we're not into the dog days of summer, but 4th of July is a federal holiday, and I believe the market is closed. All right, 10 things you did not know about the 4th of July. 10 things you did not know about the 4th of July. Number 1, the Declaration of Independence was not signed on July 4th. The first celebrations weren't much different than today's. After years of pent-up frustration, the colonies let loose upon hearing the words of the Declaration of Independence in 1776. Military personnel and civilians in the Bowling Green section of Manhattan tore down a statue of King George III and later melted it into bullets. The citizens burnt the king in effigy and held a mock funeral for their royal foe. Independence Day celebrations began to look a bit more familiar the following year as the July 18th, 1777 issue of the Virginia Gazette describes the July 4th celebration in Philadelphia. The event was closed with the ringing of bells, and at night there was a grand exhibition of fireworks, which began and concluded with 13 rockets on the Commons, and the city was beautifully illuminated. Everything was conducted with the greatest order and decorum, and the face of joy and gladness was universal. Eating salmon on the 4th of July is a tradition in New England. I did not know that, even though that's where I am. Massachusetts was the first state to recognize the holiday. That happened in 1781. The oldest annual 4th of July celebration is held in Bristol, Rhode Island. And the rest of these are not that interesting. 3 presidents have died, and 1 was born on the 4th of July. You probably know that both Thomas Jefferson and John Adams died on the 4th of July, as did James Monroe. Although Calvin Coolidge was born on the 4th of July. Sorry, that was kind of a weak list there, folks. All right, so thanks for watching. We'll see you soon and see what happens on Monday on the continuing saga of Beyond Meats and UVXY. Until then, like I said, enjoy yourself, get away from here for the weekend, and relax.